Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video I'm going to be teaching you guys how to utilize liquidity in your day-to-day trading in order to improve your win rate, stop losing trades, and overall a better understanding of the market. We're going to be breaking down this guide with a beautiful example of a trade on XDA USD, which is gold, and this trade was sent out as a beautiful signal to the team in my mentorship. As you guys can see on the screen, 15-minute sells on gold was sent at this time, and yeah, with a SL and the entry, and yeah, this trade ended up running out for 3 RRs. Our TPs were taken at 2.5 RRs. As you guys can see, everything was given to the team as a signal. So far this July, we are up 3% on the signals with this trade. And if you guys do want to benefit from the signals to come this week and this month for the rest of the July, and the rest of the signals to come from me and the team, make sure to check the first link in the description to enter in on the mentorship. You guys will get the signals, the full SMC course teaching you all block supply and demand and all of that good stuff, the new ALQ strategy with a proven average RR of 3 and a 50% win rate, a extremely profitable strategy, and you know, the other stuff such as the weekly Zoom calls, private case studies, signals, and some one-to-one help. But yeah, make sure to check the first link in the description if you guys do want to sign up for the mentorship. But without further ado, let's get right into today's video. Alright everyone, so to get straight into what I'm going to be teaching you, it's a combined 3 tips, right? The first one is understanding that liquidity can be used as the ultimate confirmation for a trade. What I mean by that is, whenever you have a supply zone that you're trying to enter from, or a demand zone that you're trying to enter from, looking for a liquidity sweep before the supply zone or demand zone was created is very, very important, because this will ultimately increase the chance of your demand zone or supply zone hitting and giving you a winning trade. Because what we have here is price doing its thing, right? Whatever, and we have an accumulation of liquidity here. Now, price boxes up in this little area of liquidity and gives us equal highs up here. Now, when these equal highs are broken and swept, I should say, when these equal highs are swept towards the upside and is followed by a quick and sharp move towards the downside, we know that this is going to be a valid move towards the downside, as price created and engineered this liquidity, swept it, and then moved off towards the downside over here, leaving us with a with fair value gap over here and ultimately a supply zone over here. So whenever we see this sort of structure being played out and this move being played out, and we see it very often whenever we see this sort of events being played out, we know that we are going to end up with a very high win rate supply zone, because this liquidity sweep is acting as a very, very, very strong confluence to validate this supply zone. So that's the first simple way that you can improve your trades using liquidity. The second thing is, which is the most common way to improve your trades using liquidity, is using your liquidity as confluence for your trade. What I mean by that is, let's say we have a supply zone over here, for example. If we wanted to see liquidity being used as confluence for this trade, we want to see liquidity being built up, for example, below the supply zone. Why? Because if we're starting to see equal highs being built up below the supply zone, this gives price more reason to, once it's over here, to reverse up, sweep this liquidity, and then move into this supply zone over here. Price is going to be magnetized towards this area and is going to be, the desired move is to sweep this liquidity, tap into the supply, and then move off. So in this case, we were able to use this area of liquidity as a confluence for this trade. Another case where you might be using liquidity as a confluence is, for example, if the liquidity is structured towards the downside. So let's say, for example, we had this low and there was another low next to it, and we had a equal lows over here. We can say that price is likely to come into the supply zone and play out, because we know that price needs to come down and sweep this internal level of liquidity. So that way, we know that this supply zone is more likely to play out, because after it taps in, there's more reasons for it to come towards the downside, and that is, for example, to sweep this liquidity. And that brings me nicely into step number 3 to use liquidity to your advantage in your day-to-day trading, which is take profits and areas of market inefficiency. If for example, we're entering off of this supply zone and we can see a clear level of equal lows, like way off in the distance, we can say that this is a logical area for us to take our profits off the table. Why is that the case? That is the case because we know this area is going to act like a magnet for price. If we are all the way up here and price just entered the supply zone, and we know at supply zones price likes to drop, where is it going to drop to? Is it going to drop here? Is it going to drop here? Is it going to stop here? Or is it going to stop here? Right? We know that price is going to drop all the way up until this point. Why? Because there is an area of liquidity which price needs to take out and sweep, and it needs to do whatever it needs to do over there, right? So in that way, we know to set our take profits for this trade all the way down here, because there's a very, very high chance that price will come down and sweep this liquidity. So those are the 3 ways you can use liquidity to improving your trades. They are 3 very simple ways, but it's often the simple things which make the biggest changes. And what we're going to do we're going to implement all 3 of these things to our trade on gold, which was sent as a signal. So I will see you guys in just a sec. Okay, everyone, here I am on the 15-minute time frame on gold, and this is where I will be doing the majority of my analysis. What we're going to do is, first of all, we're going to start off with understanding the back story behind this trade, because that's what you need to do before you can talk about any sorts of liquidities or supply and demand zones. You need to understand what's going on with your chart. So first things first is what I did. I zoomed all the way out on this chart on gold, and I saw that price was in a extremely bearish manner. We could see lower lows and lower highs being created all over the shop, with periods of bullishness, throughout the bearish structure. But overall, price was definitely bearish, as we could see lower lows and lower highs being created, and overall price was just bearish. Now, if we zoom in closer on the 15-minute and we see what happened more recently with price, we can see a clear level of bearishness was started after price took out this level over here. Now, if I bump up the time frame, for example, to the 1 hour, you can see this is a important 1 hour structural level. We can see that price came up to this point and it moved away from it, and we created loads of areas of liquidity here, and eventually price swept these 2 levels over here, and it created the start of some bearish structure. So basically what I thought here is that first things first is price has swept liquidity. There's no doubt about that. Let me just put an LQ here and LQ here to make it clear that these are areas of liquidity, and price has swept these areas of liquidity. And after we see this sweep in liquidity, we can see price has violently in a volatile manner has moved towards the downside. So what we can do here is we can zoom in and we can see that even more liquidity was swept from this level, at this level, sorry, and we can see that price has swept all of these areas of liquidity and moved down, giving us a nice bearish supply zone to trade from, right? All from the 15-minute. And so that gives us our our first way to utilize liquidity, which is liquidity sweeps before our zone was created. And the sweep is where our zone is from, giving us a good and valid zone which has a high chance of playing out, because we can see this zone has swept liquidity to the left and has swept previous areas of liquidity, giving it a higher win rate. Next, we decided to do some more analysis of what was going on here. Of course, the first thing was I noticed this break of structure, which is ultimately just validating our trade. Another thing I noticed was that price was accumulating liquidity beneath our zone. You can see that there is a lot of liquidity resting above here, below this level. And what does that tell me? That tells me that price is engineering all of this liquidity so that the closer we get, price is going to be magnetized. It's going to sweep all of these levels, and it's going to do its desired move, tap into the zone, and then drop off. So what we're doing here is not only are we sweeping this liquidity, we are also mitigating the zone, and we're kind of getting a double whammy effect, and price is going to drop off from this level over here in a very volatile manner. So that is the second way we utilize liquidity when it came to this trade. The third thing is actually to do with TPs. As I mentioned in the previous slide, we can see we have a double low over here. And yeah, all I'm going to do is I'm going to mark this up, and I'm going to say this is an area of liquidity that we can target very, very, very simply. And this was all it took to take this trade. A very, very simple trade with very, very simple analysis. But like I said, it's the simple things that make the biggest differences. So we're just going to mark this up. I'm going to set our limits just here. And we're going to let this play out. If I can just move all of this across. And now let's play this out. Bang, we get tapped in right there. And now price starts to do its thing. And there we go, we hit take a profit for a nice 1 to 3 risk to reward, right where those equal lows are. So guys, as you guys can see, we used the 3 simple ways to utilize liquidity in order to give us a high win rate trade and an excellent 1 to 3 risk to reward. All of these small points contributed to make a big difference, which was of course a winning trade, which is what we all want. And you know, it's important to take into account these small little things, as they all bunch up together to give you an excellent trade. So I hope you guys learned a lot from this video. If you did, make sure to leave a like and a comment. And thank you all very much for watching, and I will see you in the next one.